Okay, good morning and welcome everyone. I'm Zanae Dames, the Marketing and Events Manager at Digital, and I'm pleased to welcome you back to our webinar series for this month's topic, Navigating the Storm, US Tariffs on Canada and their Impact on Canadian Innovation. As myself and much of the Digital team are based in Vancouver, British Columbia, we respectfully acknowledge that we work, learn and live on the traditional ancestral territory of the Musqueam, Squamish and Tsleil-Waututh peoples. Please note that this webinar is being recorded and will be shared with our audiences in the coming week. If at any point during the session you have a question, please type it into the chat and we'll address them at the end during the Q&A portion. That's it from me, and I'll be handing it over to Jen, our Director of Intellectual Property and Partnerships, to get this webinar started. Thanks, Jen.
Thank you so much, Zanae. Bonjour, everyone, and welcome. It's wonderful having attendees from across the country for this month's Thought Leadership Power Hour. Whether you're new or returning as one of our over 1,000 participants who joined us last year, we're thrilled that you're here today. Next slide, please. The imposition of US tariffs is going to reshape the landscape for Canadian organizations, and these trade tensions are going to require organizations to more broadly rethink various aspects of their business, including their approach to innovation and intellectual property, and in particular in understanding implications for their IP in the context of companies in the US, including how to leverage their IP for competitive advantage. Over these next 60 minutes, we'll see how Canadian industry and innovators can explore strategies on leveraging IP rights to mitigate tariff effects and maintain competitive advantage, cross-licensing and legal considerations for organizations operating across the US-Canada border, and building resilience in the face of uncertainty, with a Q&A portion to close out. Next slide, please. Fundamental to the global innovation clusters is collaborative innovation, setting the framework for projects that address cross-industry challenges while creating technology products and services that can scale across industries and ultimately across the world. Digital's IP supports the development, ownership, and retention of Canadian IP through numerous vehicles, and through informational sessions with thought leaders like we've today are one of the example of that. Next slide, please. I have the pleasure of introducing today's panel. Please join me in welcoming Jim Hinton and Peter Cowan. Jim is founder, Own Innovation, and senior fellow at the Center for International Governance Innovation, where he contributes expertise on IP and innovation. An IP lawyer, patent and trademark agent, he works closely with the Council of Canadian Innovators on Canada's innovation initiatives, Canada's national IP strategy. He is also co-founder of the Innovation Asset Collective and assistant professor at Western University, where he teaches on the commercialization of innovation. And Peter, president and CEO at Innovate BC, and a recognized leader in IP strategy and IP policy advising. His extensive background spans nearly 3 decades in a diverse range of roles, from leading startups, venture capital corporations, to nonprofits and innovation-based government agencies. Most recently, he held the interim CEO role as Intellectual Property Ontario's first CEO, and is also the founder of Northworks IP and co-founder and past board member of the IAC, Canada's first patent collective. We are definitely in for a treat with both of our panelists today and the discussion sort of as it unfolds. And I'd like to start and frame some of what we're going to dive into today with something I recently came across from you, Jim, that while the focus is on tariffs, to properly leverage against US predation, Canadian firms should develop strong IP and data positions, not only in the US, but also in other markets, that restricts the freedom to operate, in turn allowing Canadian firms accessing those value chains and or extracting IP royalties for the products and services they provide. And so with that framing around some of the things that we're going to cover today, let's dive in. Let's start off with what implications, are you anticipating the tariff situation to have in terms of IP protections?
Yeah, so one thing is we've already started, the implications are happening, and Canadian firms are having to deal with the threat of tariffs and now tariffs on the ground. And I think part of the challenge is recognizing that the land under us is shifting, and for innovative firms, I think from an opportunistic perspective, that's something that innovative firms know well, is the shifting ground. And so whether the tariffs are on or they're off, or what the scope of them are, I think it creates a lot of uncertainty. But if there's anybody who's able to manage that, it's innovative firms. And so I've been working with companies to manage that. And I think the second piece is the tariffs are really focused around, and it's a tax, and really sort of an import tax on a lot of physical items. So the focus has been on those physical items. So for innovative industries, there is a significant impact, because in many cases the IP and the innovation is tied to physical products. But also from a positive perspective, the value happens regardless of, let's say, necessarily who is commercializing. And so whether it's you or your competitor, they can't just go and copy your technology in the US, even if you're pushed out of the market, if you have a strong IP position. And so if you've done your work early on building your IP and data position in global markets, including the US, you can't just charge you more for what you're doing and replace you with somebody else, because you have your IP protection. And so it's been challenging, and we're in unprecedented times. And so recognizing that, I think, is important for CEOs, CTOs that I'm dealing with. It's been a challenge, but CEOs, CTOs of Canadian firms are the strongest globally, and they have that fire to be able to rise to the challenge. And I think the one thing that we see now is that there is Canadian support for Canadian firms. There's government support for Canadian firms like we've not seen in my time. And so I think there's a tremendous amount of opportunity for us, the Team Canada approach, to come together and really rally behind Canada's innovative firms.
Maybe I'll add to Jim's, and I'll jump back to part of the original question, the implication piece. I think Jim's right. There's a lot of opportunity for companies, especially those that really have spent time building out their IP strategies and thinking about where their portfolios need to be. They're in better positions to pivot than others. But if I look at kind of the implication side, it's, from my perspective, for the short term, it's really going to be on the mechanics of protection and how firms are actually going to be adjusting where some of their short-term, not where their filing strategies are going to go, but their actual implementation of IP protection is going to be. Things like licensing, things like royalties, being able to do enforcement at the border, all those pieces have changed in the short term. So I think in the implementation, the implication of the tariffs is going to be, okay, how is that going to change our short-term protection? Long term, probably companies should be starting to look at where their IP strategy is setting them up to be, where their protection is going to be. Is there going to be changes in how the US is going to be enforcing IP rights? Just an example, there was a news release yesterday where the potential new US Patent Office Director was announced, John Squires. John comes from private sector. He's pro-patent, pro-innovation, from my understanding. Probably more anti-patent troll. He was, I think, one of the original founders, or helped get Fortress IP started, which was an IP investment fund. So if you look at to where, the implications of where the tariffs are going to be in the short term, it's thinking about how how some licensing or enforcement is going to be done in the short term. But longer term, if you take a step past where the tariffs are going to be and the signals as to where Trump is at least pushing the US Patent Office, I think IP is going to be important. Having a US Patent Office director that comes from a monetization and the money side of IP, not the prosecution side of IP, I think is a really interesting signal. So, it's always what's next after the tariffs. And that might be kind of an indicator district to think about.
Thank you. And I know we've got a little bit sort of to flesh out kind of around some of that sort of, licensing and some of those pieces as well. Before we sort of jump into that, just something, Jim, I wanted to just grab from you, and also maybe Peter to jump in as you're sort of speaking to, the CEOs and the CTOs and sort of, other sort of, leaders from, sort of the smallest SMEs to the largest sort of industry sort of folks you're speaking with across the ecosystem. Are you now sort of seeing sort of a shift in some of the dialogue amongst everyone to really start to really understand, these different IP positions, and really want to also rally around with each other, whether they're sort of that's within an industry focus or within sort of an ecosystem focus, and what that looks like?
Yeah. I think that a lot of Canadian firms are coming together, and then there's the public as well that is coming together on that. And then really from like an IP perspective, I'm seeing it happen already. People are saying, okay, it's just not going to, it may not be profitable to enter the US market. So how do we shift? And some of that shift comes from finding other market opportunities geographically, but then also moving up the value chain and finding other partners. And so collaborations among Canadian firms that can drive some of that value and accelerate some of that value, I've been seeing. And we have larger Canadian firms, and then also small nimble firms really trying to seize on that. But it's not easy, and there is a temporal element. Like IP takes decades to put in place. In some cases, you build a portfolio, it's 5, 10, 15 years for things to really take off and mature. And when things move so quickly like this, what are your alternative positions? Where have you put those in place? And so those companies that have been thinking about and putting good IP positions into place have been able to, I think, will be able to weather the storm and really come out the other side in a much stronger position. Because like if you've got a good, strong IP position, if you're in let's say the health tech space, maybe this just means that you can accelerate both domestic procurement, but also entering other markets more globally, and it pushes you to Europe or Australia or somewhere else quicker because you know the US is going to be less certain, and then your funders get behind you and rally and say, okay, yeah, this is what we need to do, and they step up to the plate and make those new market entries happen. Or even from a value chain perspective, you come in and you can say, okay, we started with this product, but we have to really accelerate our growth to be able to capture this new opportunity.
Yeah, I haven't seen a big shift, although Jim is admittedly in front of clients on a daily basis, so I would take his pulse on that. Where I've seen a shift happen is thinking about where are companies starting to do exports differently? And I think that's going to trickle down very quickly to the IP file. And why I say that, if companies that have a good, strong IP strategy, and Jim's really on point when he says it's very temporal, like an IP strategy should be something that should be evolving over time. Patents take 3 to 5 to 7 years to grant. To build a good portfolio takes 10 years. So those organizations, which are typically bigger organizations or IP savvy ones that have a strong IP strategy, should be able to pivot and have their portfolio adapt fairly quickly. And so I think once the firms settle out where their exports are going to be, it should be a bit of a flip of a switch for those sophisticated firms to be able to start to do protection in a different manner. I also think, like, we talk about IP and we always default to patents. Trade secrets happen immediately. Trademarks happen in a different timeline and different pace. So, again, I haven't seen it, but I expect those discussions to be happening internally inside companies. Say, what are other ways we could do protection? Again, those that had good IP strategies should have already thought through this, and now it just becomes a bit of, do we rebalance? Do we stay the course? Again, seeing where the U.S. Patent Office is going to go for enforcement, and their signals is going to be an important piece to kind of watch.
Thank you both for that. And just sort of slipstreaming on that, for those that maybe, aren't as sort of, far ahead sort of in their IP strategy, or maybe sort of as advanced of their position, how are you you've alluded to a little bit, sort of expecting that this sort of trade war, can impact or will impact where companies, for example, are even choosing to file for patents or trademarks, or what some of those considerations might be for them?
Yeah, when it comes to patents, it's a lot of times been the U.S. You file the U.S. patent, and maybe other spots, maybe Canada, maybe Europe. Europe's very expensive. Canada's sort of like, what do you need it for? And so those other leverage points become very important. And if the U.S. becomes an unreliable market, or more of a challenge to commercialize in, what are the other spots that you can go to? And so I've seen it happen already. I've got inbound inquiries saying, okay, we set up our IP strategy and we have limited resources, so we just got a U.S. patent, and we were like, okay, well, if it's made in China and it's sold into the U.S., then we've got it covered with the U.S. patent. If it's made in China and it sells into Canada but not the U.S., who's going to do that? Because the US is a big market. Well, now with the tariffs, that changes it. Maybe it's viable, or other companies might make it in China, sell it into Canada, but not the US. And so your US leverage point to slow that down changes. And so, and the horse has left the barn on the patent because you filed it 2 or 3 or 5 years ago. And so looking to those other forms of IP, like Peter has said, trade secrets or confidential information, being more robust and strong around that. And then also from a brand perspective, your trademark, it's easy to get a trademark filed. You can do it in an afternoon if you got everything in front of you. And so you can move pretty swiftly to protect some of those other forms of IP. But it's really, okay, we have this world spot and it's taking the US in a different direction. How do we fill out the rest of it and with the other forms of IP, and then the other options that we may still have available?
Yeah, I'll maybe add to that. Again, I just want to really emphasize, like, a good IP strategy will build your portfolio for where your business is going to move in the next 2 to 3 years. So again, it's making minor tweaks to make sure you've got the right portfolio. If I reflect upon when the UK exited from the European Union, and I kind of do a bit of a compare and contrast to where we are right now. There's a lot of uncertainty as to what was going to happen with the UK, with the patent courts, etc. So a lot of organizations looked at just filing in the UK just because they wanted to have that holding right for 12, 18 months to see where things were going to flesh out. I think there'll be a lot of probably internal discussions around which other countries do we expand our patent portfolio to, or trademark portfolio to. Well, we have the option. Like, I know if I was managing a portfolio right now, I'd be looking for every open filing I had in the US to say, do I need to have a second right somewhere else in the world? Because again, I don't know how the dynamics are going to do. What's my budget like? So I think there'll be, I think in the short term, there'll be probably a boost in looking at other international filings. And longer term, it might settle out. But, I think the challenge with the trade war discussion is, as we've seen this week, it's changed 3 times. Patents are 20-year right. So you need to find what that balance is going to be. Very expensive to maintain over 20 years. So again, running the numbers and seeing where your market's going to be is a bit of a guessing game for some organizations. But generally, I've found firms know where they're going to expand to and export to over time. And there might just be a bit more weight to international, which might end up skewing a bit of a portfolio budget towards more international filings.
Yeah, maybe to add on that, I think there's I've seen more talk of Canadian firms filing in Canada. A lot of times they wouldn't file in Canada, and they're saying, okay, well, let's have some of our own home turf, home field advantage by having a Canadian patent. So that's another thing that we've seen, and maybe Canadian companies will find more leverage with that, especially if things become a little bit more bifurcated with the US and Canada.
Yeah, and maybe I can jump on Jim's point there too. I think a lot of people may not recognize filing in Canada and then getting a patent prosecuted through and then moving it to the US is a viable option, but it also means you're doing it Canadian dollars. So as the trade war moves up and down and the dollar starts to shift, you've got a fixed budget. You also need to think about where's our best spend. It's not just filing in the US, it might actually be filing in Canada and using some sort of patent cooperation treaty to move it into the US later on and defer those costs depending on where the dollar is at. So again, it's not a straight line of discussion for every organization. There's lots of variables. Shifting into Canada might actually have financial benefit in the short term on budget spend, as well as give some additional Canadian rights downstream, which might become more important depending on where things flesh out for that organization.
Yeah, I was going to say, I mean, and as you both are sort of speaking, what it also really speaks to is more broad stroke, a real sort of organizational mindset. There's, whether that's going to be a shift for those that haven't sort of been a part of that, or regardless of where they are, to really start to understand that there isn't one size fits all. It's going to be so dependent kind of on, where they sit. And then that's totally okay. And what does sort of made in Canada sort of, look like, and really rethinking, to your point, Jim, as you talked about sort of from a branding side, or Peter, from a filing and even sort of from being able to plan out the next few years for a business. Like, it's a very interesting moment in time. It's precarious on some level, but also invokes creativity, in terms of what that can look like for an org. Maybe sort of shifting a little bit around, as we think around sort of some of the IP related provisions. We hear a lot sort of around CUSMA, and there's a lot of sort of other things that are happening. Is there anything that comes to mind where some of these provisions might intersect with the current sort of disputes, or just something to kind of have on the radar for those that are on with us today?
Yeah, so the USMCA, as well I'll call it, is it's sort of their agreement, let's say, foisted upon us, is, I think, the framing or the relation frames some of the relationship, and it was renegotiated when the current administration was in power before, and really on that we caved on all of the IP fronts that really we could. We ratcheted up IP across the board. So copyrights for 50 to 70 years, patent term extension for office delays, and they just went into force this year. We'll see how that plays out. And criminal penalties for trade secret theft. And so really, these are all things that ultimately benefited US firms to allow them to extract more from Canada, and seeing Canada as let's say, a rent, somebody that they can increase the rents on. And so if the deal is gone, if we don't have free trade, and not that I ever thought that the USMCA was about free trade, I thought it was about exactly what we're talking about, IP and value extraction. But if free trade is not on the table, then what's the point of having ratcheted up these different forms of IP in Canada that ultimately benefit a lot of those US firms? Is that back on the table? Or are we going to say, hey, we don't have free trade anymore, let's go back to the 50 years for copyright? And we didn't really think a lot about those. I did, and the IP people in my community, in our community, did. But from a policy perspective, from a firm perspective, it was sort of just like business as usual. We'll put those pieces in place, and there really wasn't an economic calculus of the value of giving or the cost of giving more value to those US firms. And there is a value benefit for Canadian firms as well, but what is the proportionality to that, and the whole calculus? So my hope is that in any further, I don't know if agreement is the right way to put it, because any two contracting parties that don't quite see eye to eye, maybe there is no agreement. But further relationship, what does that look like, and how do we ensure that we're moving up the value chain, we're getting into the intangible conversation, and we're prioritizing IP for the benefit of these of our firms? It's not fair to have copyright at 50 years. It's not fair to have copyright at 70 years. It's about who gets economic benefit by having copyright at 50 years? Who gets economic benefit by having copyright at 70 years? And answering that question and saying, okay, how do we make sure that our IP system works domestically for Canadians? And then really, like, more importantly, it's about how Canadian firms play and commercialize in the US market, in global markets. We're a small open economy. We can only do so much with our own rules. And so maybe that's why it didn't get much attention when those, I would say, drastic changes were made. But ultimately, we need to be, from a policy perspective, extremely thoughtful about this. And then firms, Canadian firms on the call, informing the policymakers about how these different changes impact you, and feeding into that discussion. Because just like Peter said, with the head of the patent office being very pro-patent, that's an articulated choice to drive economic value to US firms, because the head of the patent office has a lot of say on what is patentable subject matter, how the patent appeal board and other inter partes reviews get governed, and value extracted for the benefit of those US firms.
Yeah, I'll maybe add to that. I think when CUSMA was first negotiated, Canada was in a different place. There wasn't a lot of IP policy work being done. I think since then there's been tremendous work done by ISED and funding groups like the Elevate IP program, and funding IAC, and also just across the provinces. Before there was no IP Ontario, now there's an IP Ontario. IP falls under Innovate BC's direction now, and so I think we're in a very different place. And so from the firms wanting to see us do better, I think this is a great opportunity to kind of start to message into the policymakers that if CUSMA is renegotiated, Trump wants to perhaps make his mark yet again, there might be a better opportunity to do better, because we're in a a more sophisticated position. But if I maybe just segue a little bit on the CUSMA piece, there are some short-term consequences that too we need to start thinking about with tariffs going up. For groups that are selling, goods across the border, things like counterfeits become a lot more lucrative to start to try to sell. Cost is going up. We can sell the same product that's cheaper, just happens to have a counterfeit label on it. CUSMA actually did a really good job about doing things like letting borders do enforcement, like boots on the ground. And now maybe those are off the table. Maybe they don't want to do enforcement. Maybe they do. Who knows? It depends on maybe the flavor of the message that's coming down this month. So there is a few good things that we don't want to throw the baby out with the bathwater. But fundamentally, IP rights require we respect rights of both parties. And the tariffs are kind of undoing that piece. So we'll see where the CUSMA renegotiation or potential renegotiation may go. I'm hoping we can do better now that we're in a more sophisticated position from a policy level at both provincial and as well as federal levels, and hopefully be a benefit to companies in Canada.
Wonderful. And if we sort of, expand a little further around, those organizations, many of which that have, licensing, cross-licensing arrangements and things that are fundamental sort of to their operations, what are your both sort of thinking around the impact of that on these types of agreements between, Canadian and US, businesses, and some of that cross-border collaboration, and also perhaps some of the other opportunities outside of the Canada-US piece?
Yeah, and if anybody negotiating license agreements with American firms, they know that Americans have always been hard bargainers, right? They'll present an agreement that you'd be a fool to sign without some amendment. There's loopholes, backdoors, and they sort of expect you to negotiate from there. Whereas Canadians will present you a fair agreement and say, look, I'm giving you something that doesn't need to be negotiated. It's balanced. It provides you value. It provides me value. It reduces our mutual benefit to writing, and it's something that can be signed without negotiation. I think we project a lot of what the U.S. administration does, maybe down to Americans. I do most of my work in the U.S. And so been on calls with them. The American companies don't have the same antagonistic behavior with Canadian firms, but at some point that might start trickling down and saying, look, we're empowered by the American firms are empowered by their American government to use some of those loopholes or backdoors that they have to be able to really pull the rug out from under Canadian firms, and that's always something that you need to be prepared for. Your partner, your customer, your supplier changes materially, they get acquired, or your circumstances change. And so there's another circumstance that's changing here. And agreements that you might have in place that you thought were solid may be materially different because of this, of the ground changing under you. And who's going to pay for the cost of the tax? Like if you build something, you sell it or you license it into the US, or vice versa, who's going to bear this additional cost? And is this something that you anticipated as part of your agreement? Maybe, maybe not. Just like 5 years ago, COVID wasn't necessarily, and a global pandemic wasn't anticipated in some of those agreements. And so there's going to be, there may be some hard discussions and some customers that might say, we're not paying and we won't pay, and you're going to have to eat it. And then you as a firm, how do you manage that? How do you, let's say, prevent that from happening and go from there? But there can be some pretty tough discussions that might need to be happening.
Yeah, I'll give my perspective. I think for licensing discussions, it's fundamentally changed probably how some negotiations and how some strategies are going to be rolling out. I expect going forward, there's going to be a tariff carve out in most licensing agreements, maybe some trigger points to do renegotiation. But if you fundamentally look about how licensing is being done in the last, 5-10 years, for example, there's there's been a move to a bit more market-based approach, as in looking at revenue in similar companies and saying we're benchmarking at 3 to 5%. For hardware, we're 5%. For software, we're 3%. Well, now you've added a random 25, could be 50 tomorrow percent royalty or a revenue piece that's going on top of that. So again, who's paying that? You have a running royalty based on sales, but you have minimum volumes. Which number are you starting to use now, especially since the sales model is changing? So fundamentally, you're modeling. Typically, when you want to go in and do a license negotiation, you want to model out what it's going to look like. Now your entire model has changed. If you're on fixed royalties, well, now the licensee is bearing the cost. If you're revenue splitting, now you're both splitting the cost. So profit splitting might start to come into effect. So I think, again, fundamentally, joint venture agreements, license agreements, there's going to be a lot of new modeling. If I was a license heavy organization, I would be going through every one of my agreements to understand where's it going to go, best case, worst case, to start to look at forecasting of revenue, who's going to be triggering force majeure clauses, and who's going to be assuming this is even covered from that. So yeah, it just, again, it brings uncertainty. And again, you have a 10-year, 5-year license agreement, and things are changing on a weekly basis. That's going to be a big impact on how licensing discussions are going to be done. So, and I think to Jim's point, my feeling is U.S. firms will move very quickly to adapt, and Canadian firms maybe not so much. Just comes down to experience and exposure. So, the more we can work to rally together and do lessons learned and share with each other is going to help more Canadian firms. And then maybe the last piece you think about licensing is, which all the accountants on the call are probably thinking about, taxes. So where's your tax? What tax base are you starting to use now? Like, how's this going to implement or impact how your taxes are going to be done at a corporate level? I was on a panel a couple of weeks ago, and was chatting with my co-panelist about their organization, and his comment was, when we got to a certain size, the tax lawyers came in and started to be an influential discussion point as to how we did licensing, where the IP sits, because it becomes a tax discussion about where we can, have our best tax option down the road. So again, you've thrown all that into a bit of disarray now. It's going to have to be modeled out. So a lot of impacts on licensing, a lot of impacts. Maybe you're starting to see your shorter term agreements, because people aren't going to know where licensing is going to be in the next year or two. So it might not be a 5-year agreement, might be annual renewal. So I think there's just a lot of things that are going to come into play, which is going to slow down negotiations, which for small companies is bad, because you're trying to get the deal done, to get to market, to show your investors you've got traction. So yeah, a lot of things that if companies are ahead of, will really help them out. But if they're behind the 8 ball, it's going to definitely slow them down or impact their agreements.
Thank you both. And if we look sort of on the other side of it, say from the government side, there's sort of growing talk, and I know Jim, sort of recently you've been sort of hearing a lot of this as well. For Canada to potentially consider deepening its retaliation, under our Patent Act, where we might be able to take steps, in suspending patent rights or sort of more aggressive sort of actions, given sort of what's unfolding. Could the government use its powers in relation to whether it's sort of from a compulsory licensing standpoint or suspending applications in IP intensive industries to try to counteract some of this impact of the tariffs and what's unknown still out there?
Yeah, it's an interesting, let's say, idea, and I think it's the notion that I like about it is, let's say, it hit them where it hurts. IP is valuable to U.S. firms, and so is manufacturing from a political sense, but ultimately that's where they drive their value. If you haven't heard it before, 90% of the S&P 500 value is in intangible assets. And so we want to go at something that's important to them. But 90% of their value doesn't come from Canadian patents. And most US firms don't file in Canada because they have other forms of IP that they rely on. And so invalidating or suspending or using a compulsory license, even if it was possible, and I don't quite think it's possible, there's still remuneration required, and it has to be done by the government. So under the current act, I think it's a non-starter. But even if we had the political will and we made it so we were able to do that, I don't see it as something that's necessarily that helpful. If you said to a Canadian firm, look, one or all of the Canadian patents for this AI technology you have a free license to. But the moment you step into the US and you commercialize there, the US patents are all on the table to hit you over the head with. That's really what you're managing, is the US patent position that they have. And so not getting a compulsory license to a handful of Canadian patents is not something that Canadian firms are asking for. I see it from the pharmaceutical sense, but even then, the way the act is currently written, there's a sunset clause that we put into it in the last round around pharmaceuticals. And the fact that we never had the political will to use compulsory licenses during a global pandemic, that to me signals that this is it's a non-starter. It's not going to work, and it's not something that's going to hit. But thinking about that more broadly, it's like, how do we use our IP policies to drive value for Canada and build a strong position? And I mentioned it before, but it's really, to me, more about extracting more value and having more value in the US and global markets than increasing or decreasing the IP position of global firms within the Canadian market. We are the 10th biggest economy. We have some weight to throw around there, but ultimately, I think if you can get 12% of the US market, that's better than all of the Canadian market, because our market's 10% of the American market. And so really thinking about getting into their kitchen and eating their lunch, rather than sort of minimizing the amount of rents that we might have to pay to them for their spot. So we'll go after the bigger pie, is really my strategy, my suggestion from a policy perspective.
Yeah, I have at the end of the day, I have the same answer, just from a slightly different view, though. Like, I think this is really a latch effort to do. You look at how long it would take to actually implement that. We'll be 3 years past before something even happened if we want to start put compulsory licensing in. And by then, tariffs will have adjusted. There'll be different policy being pushed down by the U.S. Patent Office. And when I think Jim makes a really good point around, like, where the actual levers need put might be in a different place for the same amount of time and effort, both political capital as well as, perhaps even lower cost. Things like, how do we actually bring more supports to Canadian-based companies, continue to expand and support the current elevated IP programs, and continuing to support the provincial organizations to actually educate CEOs on how to build a good strategy that's international based. That's kind of where we actually have better bang for the buck. If we wanted to make a policy lever push, doing things like actually contributing towards the patent collective, or building a patent pool that actually builds a really defensive international right, whether it's US based or in another jurisdiction, or even Canadian based. So when US firms come and want to actually get margins or do enforcements against their portfolio, Canadian companies have access to a portfolio that's going to put them on equal footing, right? So I think I think it's good to have it in the list. I think it's at the bottom of the list, and if we get to it and we actually are in real trouble, because there's a bunch of other things that we've skipped over that'll have more impact, both from a policy as well as from a financial support perspective, that will actually move the needle quite a lot further compared to just the compulsory licensing.
Thank you for that, Peter. And you kind of took part of a piece that I wanted to follow up on with you both on is, as you both sort of, sit in the lens that you had as co-founders of the Innovation Asset Collective, right? Canada's first patent collective, that is surely that this could also sort of be almost sort of the birthing of a new era sort of in the Canadian landscape of really strategically looking at other patent collectives, and other sort of in other sectors and niches that the IAC can be modeled on what the IAC has done. So really taking those dialogues that you're having across sort of industry and with sort of government, saying, how can we be more strategic as a country? So I think that, that might also be a start of something for us as well as a country.
Yeah. I'll maybe talk about that a bit and then pass off to Jim. When you are trying to grow an organization, mid-sized company, you're trying to get to scale, you'll spend $5-10 million over 10 years at least building a good IP position for that organization. And it takes time to gestate and generate that, typically done through patents. And for the exact same price, we can have a portfolio built for hundreds of companies to actually access that, to give them that jumping off point, to protect them for the next 5 or so years as they start to build their own unique positions, right? So, I don't think, the way I see and the patent collector was structured is that it actually it can actually support multiple companies in multiple different sectors without needing to, expand per se the exact portfolio. Contributing funds to it to continue to build it is important, but it's not like, fund one needs started and fund two needs started, and you end up, creating two different pools. You've got one pool, and these rights just transfer between companies. So, having this as a strategic lever, I think, is really important. Again, I talked earlier about, we need IP supports in this country because our companies in general, when you compare to US and European firms, are less sophisticated. And that's just my experience in working with them. But we can get there. And this is a stepping stone to help us get there very efficiently. So I think it is one piece that should be looked at. I know on a pan-Canadian effort, it's something that can be contributed to, and the costs reduced for everybody across the board, and actually the benefits being given to a wider audience. So it's actually a net positive if we start thinking about where the freedom to operate levers start to fit into the planning, and where ICs has been growing in the last few years.
Yeah, I think there's really an impetus to double down, triple down, 100 times down on things like IP collectives, IP education, IP resourcing. We ratchet up IP protections in Canada for global firms. We need to have the corollary where Canadian firms are able to access and leverage their IP, build their IP positions globally. And I've seen a groundswell that's been happening in the last 5 years or so. IEC and certainly with IP Ontario, Peter did a fantastic job getting that up and running in Ontario, and then Elevate IP and the IP Assist. There's a lot of good programming out there, including this program as well. So, but to me, it's not near enough. Like we all know IBM for many years, 20 some years, was a top patent filer, right? But in some years they didn't pay any taxes. And so their tax policy was designed so that they could file 8,000 patents every year. And so the programs that we do have, they're good, but their orders of magnitude not big enough to meet the need and the challenge that we're up against. China's got the up and to the right filing approach, and that's a challenge that we need to mitigate. And then there's the Americans, who've always been, in my view, relatively predatory when it comes to IP. And so we need to have always been sophisticated, but the programs need to accelerate as well with this incoming challenge.
And Cheryl, if I can maybe just add a point, put myself in the perspective of a SME that's on the call today, and this sounds fairly abstract, but I think and so if I just want to try to bring it back to kind of actionable steps a little bit, but you think about IP is going to shift a little bit in the US, new US PTO directors coming in. There might be different way of enforcement being done. Again, with his monetization and enforcement background, there might be a higher preference for the US courts to shift that way. Who knows? But I think what's going to happen is there'll be some very sophisticated IP firms, IP savvy firms, whether they're a monetization firm, they will be tracking that, and they will start to shift. And then they will start to do enforcement inside the US and perhaps outside the US. And if we wait until that happens, or you wait until see where that signal is going to go, it's going to be a year or two from now. I think there has to be, as a company, as a small company in BC or in Canada, thinking ahead about how you're going to be part of that reaction force when it does swing, and waiting until the needle moves in the US means it's going to be too late. Groups like, whether it's IC or IP Ontario, starting to, as an SME, starting to work with them to understand, well, where is the international and where is the US patent enforcement and IP theme moving, and how do I keep my portfolio tracking with that? How do I be part of a defensive pool early on, having those discussions in the next few months so you're plugged in, and when things happen, you're ready to go. That's where I would start to go as an SME. It's really making sure I've got the options in front of me. I know who my peer groups are. I think the greatest thing to be ready for as a small bit of demand, and it's not to be ready for it, but you know who to call and who to talk to in the first 72 or 96 hours to say, what do I need to start thinking about? How do I get this in front of my board? Risk going to be, it's the exact same thing starts to do they have their peer group they've already plugged into, and are they starting to grow their portfolios so they can be joined down the road? That's for defensive purposes.
Yeah, thank you both for that. And I can add also, from digital's, stance where we are, and really trying to support the consortia and the members in these various things, and where we sit as part of Accelerate IP and contributing to that, and sort of the Elevate IP sort of more broadly, as well as collaborations with IPON and others in our ecosystem, where, to your point, we're also trying to sort of, how are we able to sort of work sort of smarter together and really sort of pool sort of the different resources and the different pathways where we can sort of support and champion our Canadian innovators, to be able to learn from each other, to be able to access these different resources and supports, now more than ever, especially. So that's something as well, even following after this webinar, where we can share, some of these things, and we have sort of a repository amongst our different orgs, of who we can guide folks to. So it's really been, wonderful sort of, hearing, there is a lot of this sort of this heaviness as one is thinking about, these tariffs and, all of this uncertainty that unfolds. There's a lot of, positives that we're sort of seeing and the opportunities there, yet also recognizing, I think many that are on this call kind of sort of sitting there with going, wow, how vulnerable are we? Maybe a little less so than we thought kind of going into this, but we still know that there's something there. So given that context, and that feeling, what are some recommendations that you both have, in terms of, sort of securing or managing, IP assets for those, things maybe that you haven't covered yet, to sort of provide a little bit of that guidance?
Yeah, I've seen firms already starting to take action to seize on new opportunities, and they say, okay, well, things are going to cost 15, 20, 50% more coming out of the US. Maybe we can make it here. Let's onshore some of these pieces. Because Canadian patents, let's say, were an afterthought for so many firms, maybe there's a lot more freedom to operate in Canada. So we can maybe make some of it here, and the value actually starts to make sense. And then once you're making it here, what are those other market opportunities that you can expand and then seize upon? Or do we could go to an international supplier and buy things and become an importer and then provide value into Canada. And so I see a lot of opportunities. Firms that I'm working with are seizing on those and putting plans to capture more of that. And really, it's not a time to stand still. You might have to take a step back, and that might be what has to happen. But also, there's the opportunity to advance and capture more opportunity, capture more markets. And the position you've taken and built so far will allow you to have to either take one course or the other. You're getting pushed, and you either have to take a step back, or you can move forward and push back. And maybe there's an opening where you can seize more market opportunity because of this. And so it's optimistic, but it is challenging times. And the rich get richer in these opportunistic times, and those that aren't will find themselves in difficulty. But if you put some good pieces in place, and you've got something that's valuable, technology that's valuable, IP that's backed behind it, and you can control that position, and you can weather the storm, you have investors and other stakeholders that support you, then I think now we have the Canadian public behind us. We have the Canadian governments at all levels really behind Canadian firms, and so there's this extra level that I don't think we've seen before, as I said. So I remain optimistic. Everything that Peter and those that know, we've been saying this for years, and now I think that there's time. The time is now to put pieces into place and to take action.
Yeah, if I maybe give it again from the SME perspective on the call today, really, the advice I give to companies is really start to think about where your revenue is coming from. I talked with a organization last week that has hardware and software, and they're actually starting to give away their hardware and just charging more for their software, right? So it's, they're actually circumventing the tariffs because they're hardware based right now, just because they actually have a piece of product in the value chain that's upstream and they can still have that high margin piece. So it's really looking about where your margins and revenue are coming from and if there's shifts that can be done. And then in parallel with that, like, where's your IP plan going to be for the next 5 years? Starting to think about, shifting that in parallel with your business discussions, not waiting until after, working with a firm or a lawyer like Jim and saying, okay, if I make these decisions, what's actually going to happen to my IP budget in the next 3 years? I think a lot of firms will just say we're going to shift internationally, but not realize that their patent filing cost is going to jump from, $10,000 to $50,000 for the next 3 years because they need to do the international piece, right? So there are downstream pieces. So I think it's understanding what those implications are going to be, and if you actually still have protection, again, if you need to shift. The one takeaway I'd actually also encourage companies to really think about is where government can bring support. At Innovate BC, we're the province's we have the province's mandate to innovation delivery for inside the province, and IP is a component of that. And we're trying to understand, like, where do we put our best levers? Again, I think with Elevate IP and IP Assist, they're great programs. Maybe there's some new pieces that need supported, but again, the voice has to come from companies as to say, if we have this support, it's going to actually help us export internationally and be protection there. So there's some pieces that government's going to need to hear as to what is needed, so we can be reactive as much as supportive.
Wonderful. Thank you both. And we're starting now to see sort of the first of the questions coming in. So encourage you, those that are on, to please post them into the Q&A, and we'll get to that. So the first one that has come in is, are a little bit following from what you just said, Peter, are tariffs expected sort of on SaaS software offerings sold into the US from Canada, or only on hardware physical goods? I'll put that to you both.
Yeah, and so it's evolving quite a bit, as we know, and so things will change. And so you can... from what I've seen, it's not been necessarily on software as a service, and has been predominantly focused on those hardware physical goods. But I've also seen that it may be likely as well. And so the answer is not yet, which isn't a good answer, but it's sort of what we're hearing. So far so good, but at any moment that could shift. And the digital services tax, which is sort of, let's say, the Canadian version of that, is something that Canada's had and been talking about, and so which makes a lot of sense. Like, if you get Crave, which from the Canadian telecom, right, and you have to pay tax on that, but you don't have to pay tax on Netflix. So let's have taxes that are the same for both firms. The cross-border issue and the tax issue comes into play, and then they're like, well, you're just signaling us out and putting pieces on. So we'll see how that goes. I wouldn't put anything past this government threatening and not following through, but also threatening and following through. I think you should be prepared to see it all.
Yeah, nothing to add with that.
No, and I mean, and on the other side of things, we're also sort of increasingly hearing thought of, change in domicile, right? And whether, sort of Canadian companies and others, are sort of thinking about moving to the US. So in this example, it's, do you see companies, for example, in manufacturing, that may consider that, and what that looks like?
Yeah, I've seen companies talk about it that I work with, and those are privileged, confidential conversations, but they're like, maybe we have to do this. Maybe we should just bite the bullet and move more of what we're doing to the US, and that's part of the intention. The manufacturing takes time to change because there's physical things that are going on there, but it is a discussion that firms are talking about. And a lot of the firms I work with are innovative firms, and so they don't, let's say, get their hands dirty with the manufacturing themselves. They would license it out to somewhere else. And so I've seen shifts moving the manufacturing from maybe the US to China or Europe or somewhere else, and it fully depends on how secure and how the relationships that you have in those markets that you might have. But that's definitely been something that's on the table. And certainly the Canadian government policymakers need to think about and be very close to those firms and saying, how can we make sure that we retain the value?
Yeah, I've heard discussions happening considerably more than before. I think part of it is driven from just wanting some certainty on, if there are going to be tariffs, so figure out how to be exempt from it. Where this leans back though on the IP side is companies really need to think about, well, what are they exporting if they move their manufacturing down there? There's also trade secrets, there's know-how, do you have the right patent in place? So it's not just a simple, there's the move piece, but then there's also, can we protect it after we've moved it? It's always been a risk, moving manufacturing and then your know-how disappears, or at least moves outside of the country. How are you actually going to protect that and make sure that that knowledge just doesn't walk across the street and go to a competitor down in the States or in another organization? So I'm seeing it happening. I haven't seen discussions around the IP shift in that yet, but I'm sure it'll come shortly after.
So many moving parts. Another question that's sort of come in following a little bit to what you both have spoken about is, wondering about the possibility of splitting sales of hardware to a physical good component, and then looking at that IP sort of license portion, of tariffs sort of around that. So again, potential strategy that one could consider.
Yeah, I'll maybe touch on this and Jim can add in at the end. Typically, when you have a license agreement, you have a scope of use and you can slice and dice it any way you want. It might be just for, it's for selling. It might actually not be for manufacturing. It could be for the hardware piece. It could be different percentages for hardware and software. So I think that's really up to the sophistication of the licensee and again, where they're seeing the revenue starting to come from. So that really comes down to just setting the scope of a license agreement and making some adjustments based on where there might be a different business model now.
Yeah, and having the ability to sort of shift value between different products, services, or hardware and software, it gives you that flexibility. And so my suggestion as well would be to stay close to Canadian policymakers on this, because there's tariffs and then there's counter tariffs. And so you may be able to cook something up that works well to manage this. And then there's something that happens on the other side that sort of negates it. And so staying close with the policymakers and say, this is how we as a strong Canadian firm think that we can still weather the storm. And this is how counter tariffs might benefit or reduce or challenge that position. And so staying close to the policymakers that define those lines, because it could as easily been saying, okay, there'll be retaliatory tariffs on the IP license portion. And then all of a sudden that puts you in a much worse position. And again, these rules are being made up on the fly to try to respond to the challenge that we're in. And so having that relationship with the policymakers, with the group that is from trade or where else that is tackling this challenge goes a long way to making sure that you have the freedom to operate and be able to extract the value where you need to.
Mm. And rounding out sort of a little bit of what was touched upon earlier by you both is, one member is saying, we typically file in the US because it's quicker to process than in Canada. And once claims are accepted, we file in Canada. And so looking at, would you now consider sort of filing first with the potential shifts? And I think it's really going to be, I guess, as you both were saying, depending on the circumstance and what organizations might want to consider in that case.
Yeah, I'll say it's probably going to stay the same as it was filing in the U.S. We file the U.S. provisionals, and then in a year filing the Canadian application, if that makes sense, in the U.S. formal or a PCT, depending on what the approach is, or in other international applications. The Paris Convention hasn't. I haven't seen the current U.S. administration say that they're going to get out of the Paris Convention, which governs that 1 year period, and for other things like trademarks as well. They haven't ripped that one up or promised to. So I think that approach might still make sense. But I think you'll want to be mindful of how the new head of the Patent Office, as we always have, approaches IP, and if you're a rights holder, that may be a good spot. And then on the Canadian side, we are seeing some of the logjam reduce with all the good work that the resourcing has done on the trademark side and the patent side to be able to get some of those things move through quicker, if that's important to you as well. So, but like this is a good conversation for your patent agent and say, okay, how should we think this through? But my sense, and when I've been talking with companies is it hasn't necessitated a necessary change in action yet.
Okay, and a final sort of thought that's come in from one of the attendees is, sort of, are there potential, worries that the US could apply national security rules sort of to patent filings from foreign companies and countries? So, this is, I think, a stay tuned, could be a part 2 that we have in the sort of in the series, of as things unfold.
Yeah, and national security and economic security are interchangeable when it comes to the U.S. administration, and maybe that's the reality of the times that we're living in. But I think that our governments need to take that approach as well. Economic security, national security, there's a significant amount of overlap. But you can see the U.S. Patent Office, for example, becoming politicized, and then funding agencies all across the board doing more overt things. And we have the notion of most favored nations or national treatment. Everybody gets treated equally, whether it's a U.S. applicant or an American or a Canadian applicant in front of the Patent Office, for example. But that starts to become overridden when national security starts to take place.
And as we prepare to sort of close out, what is one final thing that each of you would like to leave with those on our webinar today?
Yeah, I'll maybe go first, but I think there is now a Team Canada approach here, and building on that. And we've even in the last couple of weeks, Canadian policymakers move quickly in these really unexpected times to support Canadian firms. And from a Canadian federal provincial government perspective, that's not always the case. But I see that that's happening, and it's very much appreciated. So it's a challenging time, but I think that we're more united than ever to be able to address those challenges. And Canadian innovators are the strongest, best, and that I can see globally. And so we can come out stronger on this, but it's not going to be without a fight.
Yeah, I 100% agree with Jim. I think time has never been better for all the policymakers to take advantage of the network that's been built in the last 5 years. I think my one takeaway for companies is do your IP planning in parallel with changing your business strategy, because there could be unintended consequences downstream that you won't realize for a couple of years. And working with agents and attorneys like Jim, I think will really make sure you've got your plans well laid out.
Thank you both. Before I hand it off to Zane, on behalf of Digital and everyone that is on today, for carving out time out of your very busy schedules to share your thoughts and to help to try to demystify this very rapidly moving space. As part of this, we'll be sending out some information and links, and encourage those that are on to absolutely look at what the Council of Canadian Innovators is doing, the exceptional thought leadership from a national pan-Canadian side of things, and really to get involved in that as much as possible. Innovate BC and the other innovation ecosystem organizations where we really are trying to rally sort of across the country. And so we'll share those links as well, and encourage you to reach out with any questions and things that we may have. So once again, thank you both so much. And we look forward to having a part 2 to this. And thank you everyone for joining us.
Thank you once again for joining the webinar today, hosted by Digital and our wonderful director of IP, Jen. All those attending today will receive a follow-up email in the next couple of days with any resources discussed throughout the session. And that's it from us at Digital. We'll see you at our next webinar session. Goodbye.